Develop success from failures. Discouragement and failure are the two surest stepping stones to success. Dale Carnegie. My friends, each and every day you can fail as many times as you need to. Practice trading. It doesn't cost you anything. You will be learning by doing, and you will get better and better and better. And as I say to all my students, don't worry about how long it takes, because once you master the charts, you'll make up for every minute you ever spent. And the only way to do this is each and every day. That's why we only ask 10 to 15 minutes, but 5 days a week. The markets are open 5 days a week. We need you here 5 days a week. Let's jump into these charts. Things rolling back in the direction of the down move. We see the S&P 500 down 1.42% today. And again, as we look at the 2-day chart, we had a doji on that last candle. That finished drawing yesterday. Today is Thursday, the start of the latest 2-day candle, and it's just below that weekly trend line. We can see where on the half day, lots of indecision in the morning and then dropping over with high volume in the afternoon. Look at all the volume this week. And again, another spinning top. We would like to see this a strong red down candle. It's one of the reasons, again, that we have not initiated a down trade in the S&P. Not as strong as the NASDAQ 100. Now, the NASDAQ 100, we did initiate a down trade. It's already been very good to us. We see where we had a nice interim high. We had a red spinning top with good volume, and then, of course, lots of down movement last week. The low last week was 455.63. This week, 454.15, a lower low. We do have another doji forming here. Well, it's pretty close to a doji. I'd call it a red spinning top, but it is a slight one. Again, below the 2-day trend line, we have seen, on the 2-day chart below the weekly trend line. And of course, the half day never has moved above it like on the S&P. We've stayed below the weekly trend line. Both times you can see all the volume the last 4 days, the last 2 days, last 4 half-day candles. Now again, just to show you where we are on my PSQ trade, this is the single inverse of the NASDAQ 100. I already took profit back last Thursday morning where we hit my first one-time ATR on the 2-day chart. We are riding this thing out, hoping to move back up and hit at the top. We hadn't gotten up there yet, but at 2 times the ATR, that would put us at 5.51%. So I've already taken 2.76%. This is double that. We'll see if we get that high. We're in the green. Hopefully it's going to keep going up. And again, this is the single inverse for the NASDAQ 100. It shows you right there. Short QQQ. That is PSQ. It is a single inverse. Now, I do encourage you, if you want to make money when the markets go down, of course, you would be looking potentially at puts. And of course, if you're a Patreon member, first thing you get is our Options Made Simple, the Charting Wealth Way. That's a 3-part series we give to all of our Patreon members. First email you get from us the minute you sign up at any of the 3 levels of support. But if you want to use puts, yes, you would use them in a down move. Otherwise, you would use something like for the S&P 500 SH, which is the single short for the S&P 500. For the NASDAQ 100 PSQ, for 20-year U.S. government bonds, it's TBF. And there also is a single short for Bitcoin that we use. I think it's BITI. We used that a couple of weeks ago in a successful trade when Bitcoin was pulling back. So again, these are for you to practice trade. You need to practice trade inverse funds to understand them. They are revalued every day. Your losses will be multiplied if you go in the wrong direction. They have higher fees. We've got a great training on inverse funds, how to make money when markets crash. You need to understand what you're getting into. And how do you understand it? You practice trade. It doesn't cost you anything to do that, and you will learn by doing. So we do see that, again, stocks going down, things going in the right direction on our trade on the inverse of QQQ, the NASDAQ 100. Let's go to 20-year U.S. government bonds. They're up for the day, the only up for the day. As we look, we see that they are up a little over 0.5%. Now, we did have decent volume last week. We do have decent volume this week. Last week, things tried to roll over after 2 weeks up. This week, they're taking off quite nicely. Does that mean bonds are on a tear? Well, it could. It could actually mean that bonds are going to keep going up. I'm having a hard time reading it because it has been so up and down, up and down. About the time you think it's going to take off, it pulls back on you like it did last week. So I'm staying away from bonds until they get in a nice clean trend, and then we can follow it. Could you look to jump in tomorrow on an up move on bonds? I mean, you could look at this as an interim low and then an immediate rotation over with all this energy going up, but I don't like that candle. I'd rather see a green spinning top. I'd rather see a good low over the course of a few weeks, not just 1 week pulling back after a false start. Not the way I want to jump into something, so I would say no. What are we doing with gold? Gold pulling back today, 0.34%. We saw where gold had moved up for, 2.5 days, and then this afternoon pulling back right there on where we have seen gold touch previously. We've seen it happen 2 times right there. A couple of weeks ago, it pushed through and then came back over. Haven't had a candle itself penetrate. The wick did, and now we are hovering right there below it. Don't know what gold's going to do. We'll keep an eye on it. Sort of think it's probably just going to drift around here, then maybe move back down unless the market really self-corrects and things settle out pretty quickly. But I don't know. That's why I'm not trading gold right now. I don't know what it's doing. I can't read it. I only trade charts that I can read. That's why I jumped into the Qs. And again, we are not gamblers, my friends. We want things that set up, that tell us what they're doing, that will give us the results we want the majority of the time. Then we limit our losses with 1 time. The ATR on the 2-day chart, we can reduce volatility, the effect of volatility by reducing the size of our X trade. That is our standard trade. We have a great formula for that. And again, we've got ways to reduce the risk so that when we have things move in the right direction, we magnify our gains. And again, the real key to successful trading is minimizing your losses. Lastly, we'll take a look at Bitcoin. Bitcoin pulling back almost 3% today. You can see where it was sitting after yesterday right there on the weekly trend line and has pulled back below it on the half-day chart. Same on the 2-day chart. And again, we've gone from a green candle to a green spinning top this week. Those prior 2 weeks were nice. We have hit a higher high this week, but we have lots of indecision entering into Bitcoin at this time. Does it mean it can't go up further? No, it can, but it really is pulling back. So we'll keep an eye on things. That is where we are as we end the day on Thursday, going into the last trading day of the week, Friday. Patreon members, we do have your weekly vertical crossovers. I've actually already uploaded those for you at the website at Patreon, the Patreon website. We'll also be sending the email out to you. Charting Cryptos, Commodities, and Currencies is also available at the website. I'll be sending that out to you. You have questions, problems, concerns, all of you, don't hesitate to reach out to us, cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.